Money FM 89.3, the best of the afternoon update. The afternoon update with Lynlee Foo.
Money FM 89.3, you're with me, Lynlee, on the afternoon update. Now, Singapore has positioned itself at the forefront of Southeast Asia's wellness industry, setting ambitious goals to become an urban wellness destination. The Singapore Tourism Board projects the city-state's wellness tourism sector will reach $1.1 trillion by 2025. Initiatives are underway to increase wellness experiences on its slate of tourism offerings. The STB last year launched a tender to develop and operate a wellness attraction at the Marina South coastal site, which, if memory serves me right, is around over 42,000 square meters in size and is on the waterfront. Very attractive piece of real estate. There is good reason for such plans. The wellness industry in Southeast Asia is experiencing remarkable growth, presenting lucrative opportunities for investors, particularly in the wellness real estate sector. Developers and investors are responding to a fundamental shift. Today's buyers and tenants don't just want properties, they want environments that promote health, sustainability, and a sense of community. So how will wellness real estate redefine urban landscapes and investment portfolios in Asia? What are the trends among industry players pursuing growth in this sector? For more, I'm joined by Otto Twist, Southeast Asia Director at real estate firm Savills. Otto, great to have you join me this afternoon.
Good afternoon, Lynlee. Thank you very much for having me.
Now, for the benefit of our listeners who may not be familiar, what defines wellness real estate compared to traditional real estate?
Wellness real estate now is an asset that is described as something that includes wellness facilities. The clue is really in the title here. Mm-hmm. So we're looking at gyms, wellness clubs, spas, medical use, and particularly hotel amenities are playing a huge part in this within the branded residences sphere.
Okay. How has the concept evolved over time?
Certainly. I think it's a rapidly expanding industry, as you kind of mentioned in your introduction there. The wellness real estate class globally currently is valued at $275 billion. By the end of next year, we're anticipating that's going to rise to $580 billion. In Singapore, it's evolving by the day, as I can see. We're seeing lots of wellness clubs open here. Just next to my office, there's Recoup, which is a wellness club that has a cryo chamber in there, lymphatic drainage machines, and an array of on-site professionals that kind of help with diet and wellness. Mm. And then you've got the social element of it, which people go into these clubs to socialise. An example of this would be the Ice Bath Club that is due to open its third site in Singapore, where people go and use ice baths, they have saunas, and they have social recovery.
Okay. Southeast Asia seems to be a growing hotspot for wellness real estate, Otto. So what is it about this region that's driving the demand for wellness-focused developments?
Certainly. I think Singapore as a whole, we're seeing a couple of things that are really driving this. There's a post-pandemic shift towards holistic living, with buyers now prioritising their health and well-being more than ever. If we look at the last 3 years in Singapore alone, there's been a massive 60% increase in gym uptakes and gym usership. We have an aging population within APAC, Japan, Singapore, Australia. By 2050, we're anticipating that the population of over 60s is going to double to 1.2 billion. So there's going to be a clear focus on that. And then we've got this bulging middle class coming through in Vietnam, in Indonesia, and the continued rise of wealth here in Singapore, where the wealthy are investing in their health moving forward.
And what demographic are we looking at? What demographic is driving this trend?
Certainly, I think there's kind of three things that probably drive this. This is institutional investors to start with. Last year alone, we saw Hines invest over $275 billion into a build-to-rent development in Brisbane that had very good wellness facilities integrated into that. Then we're seeing high net worth individuals and rising middle class that want a home that provides this for them. And then finally, the millennials that are focused on a work-life balance and a home and a space that gives them the opportunity to improve their health.
Okay, so from an investment perspective, how do you view the growth potential of wellness real estate in Southeast Asia over the next few years?
Yeah, certainly. I think from an investment perspective, if we're looking at kind of ROIs and on what that's commanding, as I say, the real focus on this for people is the branded wellness piece that tie in with the residences. And we're seeing that they'll probably achieve a 30% premium compared to a traditional real estate asset that doesn't have that wellness facility or amenity integrated into it. With that, you're going to see tenants willing to pay more, a kind of 20 to 35% premium in some cases. Occupancy rates will be higher in these areas due to the facilities. Then a great example of this would probably be the residences at the Four Seasons in Bangkok, achieve a huge premium both on the hotel and the residential because of the integrated facilities.
Okay, I'm going to pick up on that. Are there particular property types like residential, commercial, or mixed use that are more successful in the wellness real estate market?
Yes, certainly. The ones that are driving the traffic within the region are mixed-use developments. 90% of these developments have a hotel element to them with a residential element integrated into it, where you have a good operator from your hotel, so an Aman Group or a Four Seasons or a Mandarin Oriental or a W that can provide the wellness facility that residents who live there permanently can have access to. That is the most popular by a long way currently.
Okay, looking at things from the developer's perspective, what are the main challenges that developers face when creating wellness real estate in this region?
Yes, certainly. I mean, one of the challenges that every developer I meet is up against currently globally is costs. The costs of installing and building sustainable buildings and this wellness infrastructure within there is more expensive than traditional amenities and infrastructure within buildings. There are regulatory barriers in certain markets. Land use or development approval for this kind of development is proving a challenge. And then finally, investor and consumer education. People willing to pay a premium for this. There is some work that needs to be done around this for developers to command this premium on the asset.
Yeah, I would imagine it would be quite challenging to create that balance between luxury wellness properties and affordable wellness-focused housing.
Yeah, it certainly is. As I say, the bracket that people are focusing on is these premium markets. So the resort markets in Da Nang in Vietnam, for example, or in Phuket or Bali, we're seeing it come through. In certain cities, the premium is difficult to justify for clients.
Okay, so could there be partnerships or collaborations they can take on to enhance the value of wellness properties?
Certainly, yeah. The partnerships piece is a huge thing, where we're seeing likes of Capital Land or CDL try and deliver these amenities by themselves is where they struggle to command the premium. So having a good brand partner, again, relating back to the hotels piece, someone that is proven in delivering a good wellness infrastructure will give the client credibility to justify that premium. Without having a track record of wellness management facilities, it is difficult to create that track record from scratch.
Okay. Do you foresee any regulatory environment type of challenges that might affect the development of wellness real estate?
I think one of the things that we've got to look at here is really government support, in Singapore and Malaysia promoting sustainable development and health moving forward. There is always planning issues and planning struggles that people are up against. But I think we're going to probably see, across the region over the next few years, more and more government initiatives to support the development of sustainable developments and ones that have a good infrastructure in them. Going back to that ageing population, the government are going to need to encourage developers to support the ageing population across the region.
Fantastic. And what emerging trends do you foresee in wellness real estate in the coming years?
Yeah, certainly. So I think probably the outlook kind of heading back to the start, I would suggest, social wellness outside the development space is becoming a huge thing, particularly in Singapore. Every week we hear about new clubs opening. In 2 weeks' time, there is another wellness club, the Plunge Club, opening in Harbour CBD, which is going to have a 30-person sauna in, and it will help bring people together through kind of group breathwork sessions. So rather than people going to the pub or out for a gluttonous dinner, I think we're going to see more focus on social wellness and social health. We're going to see branded residences that I've kind of mentioned and branded resorts focusing on this grow across the region, the rise of longevity-focused development. So anti-aging clinics, we're going to see more personalised health plans, medical wellness centres, definitely more of that coming through.
Okay, and before we let you go, Otto, do you see this becoming a mainstream market segment? What's the future outlook for wellness real estate in Southeast Asia?
Certainly. I think with real estate, it's always difficult to get alternative asset classes into the mainstream asset class. So I think it will take some time. I think what we will see from this is really all buildings and all developments having that element of wellness in it, particularly on the residential development and hotel side. I think we'll see more private equity into kind of speculative clubs that are coming through. In the short term, it will be driven by that, and then long term, we're seeing Blackstone's real estate investment platform look more and more at this. So it's certainly becoming a big topic, but a main investment, I think we'll see a few more years till we get there.
Okay, thank you so much for your insights today, Otto.
Thank you very much, Lynlee.
Here's Otto Twist, Southeast Asia Director at real estate firm Savills.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.